Welcome back, Andrew. Nice
Good morning,
to
Dale. Thank
be
you so
back
much
in
for having
touch
me
with you.
back, man. How's it going?
Going good, Andrew. What's top of mind in the middle of a financial crisis for you?
Yeah, oh my gosh, where do we begin? Should I share my screen?
Yeah, go ahead.
Yeah, let's take a look. Yeah, there's a ton going on. Let's see. Let me know if you can see this.
We got it.
All right,
S&P.
so yeah, so pretty
Okay.
much we had this banking blow up.
Yeah.
And for me, just to preface, I'm an active trader. I trade stocks and options. I'm competing in the US Investing Championship this year, so I'm reporting my results every month. So all this stuff is super, super important to me as a competitive trader.
Okay.
Um, yeah, so I think where we're at right now, obviously we had these bank blowups, which is really bad stuff. And we're in a situation where there's a lot of headlines flying around. There's a lot of narratives. I think it's very easy to get lost in the sauce of all these narratives. But I think my major takeaway is the Federal Reserve stepped in very, very quickly. It was an almost immediate
Yeah.
reaction. And they basically said, hey, we're going to bail out these banks. So now I think the big question moving forward is we have this Fed meeting that's coming up in about a week. And what
Yeah.
is the Fed going to do at that meeting? Are they going to now pivot because they've bailed out these banks? Are they going to hold strong on their fight against inflation, et cetera, et cetera? So if you look at this chart that I'm sharing with you, Dale, these are the Fed fund futures, and these are
Yes.
going out several months into the
Right.
future. So like
Okay.
we can look over to this one. This is the March 2024 Fed fund future. This is just telling us, hey, the market believes that the Fed funds rate is going to be at XYZ level in March of 2024. Just 1 week ago,
Yeah.
this thing was all the way up at around 5.36%.
Yeah.
Now we've cratered, and this thing is all the way down at 3.76%. So the market's now pricing in that the Fed funds rate about a year from now is going to be significantly lower than where it is today. So the
Yeah.
major
It's
thing I'll be
slightly above
watching,
where the 10-year is right now.
exactly. So the major thing I'll be
So,
watching is when the Fed comes out, do they start talking these back up and say, hey guys, like I think you got a little carried away. Even though we have this banking crisis, like we're still going to be moving forward, or do they comply with what the market is priced in? So this is really what I'm watching on my screens. These Fed fund futures, what do they do? And I think other than like exogenous
don't you think they
shocks.
have to maintain, for them just to pause
Mhm.
and not raise rates would be a signal to most market participants that, you know what, the Fed is worried and the Fed is scared. I should be too.
I think it
It,
definitely would be. And I
yeah,
think for that reason, they're going to do whatever they can to save face. And even if like, let's say like they're pretty much done tightening, like let's say like they do 25 bips in March and then they're pretty much done. I honestly think it's much better for confidence to go ahead and do the 25 than just do zero. Because to your point, I think that would really worry the market if they didn't do anything. So let's see what's currently priced for this meeting coming up. Yeah, so right now it looks,
I just want to say something about,
yeah.
about the Fed.
Hmm.
And, what's going on now, the Fed is being blamed for people that did not manage risk at all, that stayed long bonds where any 1-year technician would have been able to recognize that the bonds were in a bear market. So is it really the Fed's fault that they raised rates, or was it the management of staying wrong too long really the problem? It's not like the Fed wasn't telegraphing to all these banks that, we're going to be raising rates. You would think they would say, well, maybe we ought to hedge our portfolio or shorten duration. If we're wrong, we should get out. So, I mean, is this really the Fed's fault, or is it the ignorance of malinvestment of people with big responsibility at banks just to sit there with an overvalued instrument as it was, rates were not that low since the Civil War. So it wasn't like they were sitting on value. So, you know, I just wanted, I really don't think this is the Fed's fault for raising rates. I'm not saying that it's great that they had to do it because they stayed loose so long, but I don't think you could put this on the Fed because people stayed in the wrong position with billions of dollars for a year during the largest magnitude move in interest rates that I've seen in my career. What do you think about that?
Yeah, I think it's tough. I mean, myself as a risk taker in the market, you know, someone that's making and losing money in these markets every single day, I'm pretty sympathetic to other people like when they make mistakes. I think there's been so many mistakes that have been made along the way. Like it's not the Fed's fault that we had a pandemic. It's not the Fed's fault that we had this Russian invasion of Ukraine. Some of those shocks, like obviously like those aren't their fault. I
But
think
how
that
can you stay long bonds when, you know, uh, they just kept breaking down and breaking down and breaking down?
that's a great
How
point.
can how can you do that?
Yeah, I think what it likely was is, you know, even the Federal Reserve, they said, "Hey, this inflation is transitory for so long." And then
Yeah.
of course they changed their tune and they said, "Hey, this is much more serious." But I remember like last year, almost every single month, most market participants were really looking for things to just quote unquote go back to normal. And I think
It's,
interest rates were low for so long that I think
yeah.
most investors and probably most bankers as well just didn't really believe that the Fed would get up to these levels and that they would stay there for this long. So it almost becomes like a pain trade. Like I'm sure many traders have experienced. Like you just stay in the trade and you're like, but it'll probably turn back around as soon as I close. So I can't do that. And here we are now. Things have just gone so far. And yes, some of these banks have
Thanks for
really
letting me
imploded.
include my tirade in your
Yeah, no, I
interview
mean, it makes a
today
lot of
here.
sense. I think it's just people that are sort of in disbelief as to how far these rates have gone.
Yeah.
It's yeah,
So
it's a tough
so
situation.
what are you seeing? And I know so for this trading championship, God, was this the one that started a long time ago? David Ryan, that's how he made his rep in that trading championship.
Exactly. Yep. So
Okay. Yeah. See, my
it's
memory still works. Even though I think I have old timers. Um,
yeah, so
it
this
still works.
competition, you're spot on. David Ryan was in this.
Yeah.
A lot of really big traders. I'm competing in the division where we can trade stocks, options, and futures. And yeah, the
Cool.
competition started Jan 1, and we're reporting our results every month. And we are, we'll see how it
How you
goes at the end
doing?
of the year. What was
How
that?
you doing? How are you doing the first quarter?
So
That's
far,
almost
we're
over.
having a blessed run, to be honest. So
Nice.
I think January, like if we just go over here real quick to the charts, January was such, I don't want to say an easy month to trade. It's never easy, but I'm sure you remember like everything was
Yeah.
going up in January.
Yeah. Right.
So yeah, we were able to take advantage of that. We put up a 39% return in January. And then I think the big trade, and this is something that, I was sharing with my clients and my subscribers, was I think this is the SPY chart right here.
Yeah.
Things went way too far too quickly in January. And if you
Yeah.
look right here at these candles, you can kind of see as this thing goes parabolic, like the shape just gets way more vertical here.
Yeah.
This right here was when we started to actually get short the market right in this period right here between maybe like 4,100 and 4,200. So we were able to have a positive month in February as well. So right now, I reported my results for February. We're up about 48%. So we're having a really good run. And honestly, my game plan for March with all these bank failures has been, hey, let's not get obliterated in March. If we're thinking about this contest for the entire year, is March when all these banks are blowing up? Is this going to really be when I make my nut for the year? Probably not, but there's a lot of risks out there. So
Okay.
for
So
March,
you're
I've been
taking the
trading a lot
approach that
smaller.
everyone came in when the SVB thing happened and said, Coach, what should I do? What should I do? And they're thinking, what should I buy or sell?
Hmm.
Isn't another option nothing?
Exactly. And the money market rates are so high right now that, I feel like it's almost a cliche. Everyone is saying this at this point, but you are being paid to be patient. So, like, if you are just not feeling comfortable in the market, you can go into like a Vanguard money market fund, which is what I use. Vanguard's my alma mater. I used to work on their fixed income trading desk. Um, yeah, you can collect like a 4.5% yield while taking no risk. So, yeah, I've been leveraging having a cash balance. I think it's been great for traders where, yeah, you can still trade, but you don't have to be like FOMOing in because, yeah, you can pick up a decent yield just being in cash.
Okay. So, so you want to, you're a little bit of risk aversion right now. So, any ideas that are actionable going into the Fed next week, or you just
Yeah.
wait for all the dust to settle before your next time you assume risk?
Yeah, so I do have some trades on the books. And to be honest, I think that's the best thing. If you approach the market being risk averse, like this week, I was like, all right, there's no pressure to make any money, but I will be disappointed in myself if I have a big drawdown. That was really my goal. And sure enough, if you're patient enough, you do find some opportunities. So one that we picked up yesterday was Charles Schwab. And I'll show you what's happening here. This is more of like an event driven trade. This isn't like a trend trading trade or anything like that. Um, but take a look.
Wow.
Charles Schwab has gotten hit with this banking run, right?
Yeah.
Well, look what we have here. So this was, pull this
That's a
over.
broken chart.
Exactly. So for this one, and I noticed this as well, if you're a trend trader, like you're using your moving averages, like that sort of thing, this is really an environment where there's really no trades for you. If you trade events and things of that nature, there are some opportunities. So this was something that we posted in our Discord the other day. Check this out. We got it right here. I'm going to open it in the browser.
How many people in your Discord room?
Right now, it's about 40 of us.
Yeah.
So yeah, it's a nice group. I love everyone in our Discord. Really, our philosophy is like, we're in this, I'm competing for the year, but honestly, like we're in this for a multi-year time horizon. So I find the best people that work well in the group are people that share that mindset.
I'm
Take
a
a
big
look here.
believer in communities. Yeah.
Exactly. Yeah, you guys have a great community as well. Um, so take a look at what we found. Charles Schwab, CEO, says clients poured in 4 billion at the height of the SVB panic. They had significant inflows. The CEO bought shares. Again, there were 4 billion of inflows. And look at this right here. Schwab's 12-month liquidity level was equal to nearly the entire banking operations deposits. And the CEO came out on CNBC, was pretty much like, guys, like we've had inflows in this and like everything is fine. Like we're really not involved.
Yeah.
So for this one, when that Credit Suisse news dropped yesterday, we were able to pick up Charles Schwab right around this like $56 mark.
Yeah.
And
It
so
could
this was
rally
a,
back to what, 70 or so? Is that what you're looking for? Like,
yeah. So honestly, for this trade so far, we're sitting on like a 7% gain, which is awesome.
nice.
Yeah.
Yeah.
I'm sure, it doesn't always go that way. Um, but take a look here. This 10-day exponential moving average
Yeah.
is right around like 64, $65.
Yeah.
In this
You'll take it
environment,
there.
yeah, I'll probably take at least a good
Half.
piece. Honestly, if we have like one more good day, I'll start peeling some off of this because I don't want to get like married to anything in this environment because who knows what headlines could come out. But
Yeah.
yeah. Mhm.
It's hard to do anything much more than one night stands, huh?
Exactly. Yeah. So
Let
anything that
alone
you
get
can,
married. Maybe you'll
exactly.
find something to date after the Fed. How about that?
That could be. Yeah, I
Or
think
even
it
get engaged to,
perhaps we'll see. Yeah,
but
like
no proposals. You're
No,
not, Andrew's not getting down on his knee with a diamond in his hand in the markets for a
not yet.
while.
No, yeah, no diamond hands over here. But I'll show you one other thing that's really interesting me, Dale. This is, I think, really cool. Check this out. So this is again, like this is would be more of like a longer term thematic trade. So the way that I see us in this cycle right now is, okay, we've been in the tightening part for about like a year and a half. So, okay, the Fed's tightening, they're fighting inflation. We're
Yeah.
making progress on inflation. We're not there yet. But now we've hit this point where the Fed's pretty much broken the system, and we may or may not be backing off of that tightening, as we saw in this chart earlier. So if I'm thinking about this cycle and the way it goes, typically you go from tightening to no longer tightening, and then you go to easing. So check out this chart right here.
Yeah.
And this, for whatever reason, is highly controversial. I don't know why. I think just because it's Bitcoin. But this is a correlation analysis that I did on Bitcoin and the M2 money supply. And what I found was if you take the M2 money supply and you lag it by a year, there's a 0.72 correlation with the price of Bitcoin. So pretty much like if you think that the M2 money supply is going to be higher a year from today, that's where, according to this correlation, you would want to be adding a position in Bitcoin.
Did you buy that dip at 20?
So I'm long Bitcoin from 23K. That's my cost basis. I've been adding a position, but I did actually add to my position yesterday after running this analysis.
Okay.
So take a look here at the chart for Bitcoin. Check this out. So if we go to, looks like S&Ps are kind of slipping a bit here.
Slipping and sliding. They're going to bottom into the next week into the Fed and the equinox.
Yeah, that would be great.
Yeah, we'll see. So look for inflection points next week.
Yeah, I definitely will be. Take a look here. So Bitcoin, if you look at the structure, the structure looks interesting here. We're breaking out above this consolidation. We're kind of probing it. It's not like we have like a full-on breakout yet.
Okay.
But yeah, this looks very, very interesting, especially given where we are in the cycle. I know some people will say there's no way the money supply is going to go up in a year. Like the Fed's tightening now, but things in this environment are very fluid. If you had asked me a week ago, is the Fed going to step in with a liquidity facility for banks? I'd say no way. So yeah, I think that's why this asset is starting.
The world changed. The world changed.
Mm-hmm. Yeah, and you've been in this game a lot longer than I have, so I'm sure for you, like you can see a lot of, like, what are you seeing in terms of the way things are shifting? Is this similar to things that you've seen in the past, Dale?
It rhymes. It rhymes a little bit with 2008, but I think it's at a different level. I think it's really just about rolling debt and liquidity issues, and the Fed's going to be putting their thumbs in the dike, and they may be able to keep the whole thing going for a couple of years. But I think there's one more flush in the market into the summer, June, July. I'm looking for about 3,000 on SPX and looking for a rally from up to about 4080, 4100 to reestablish long VIX call positions. So I think there's one more good flush, and then I think we have a good market for a couple years.
Yeah, that makes sense. The levels I'm watching, to your point about the ES, and really this is as like a tactical trader. So with that Fed meeting coming up next week, I think that if we don't get any more bad headlines, and that's like a big if, I believe there could just be a ton of gamesmanship that happens in this tight little range we have going here.
We could take out the lows one more time, and it won't confirm momentum wise on a lot of stuff I'm looking at.
Exactly. So like I see there's traders that are really into the macro, Like if the market goes up even like a 0.5%, they're like, how could this be happening? There's a banking issue going on.
Okay, here's the new paradigm. I feel like I'm being, well, I do this all the time anyway.
Mhm,
The new paradigm, besides the fact that there's no Fed put anymore, is
mhm,
that you have to learn to be a tactical trader,
definitely.
because try and find trends, and even within the trends, if you don't learn how to book things and ring the register, you're going to be seeing a lot of gains being given back. So you have to learn to be tactical. You have to know how to trade price action, bottom line.
Yep.
Inflation, deflation, any economic condition that the globe is in, um, you have a playbook for it, and that's price action.
Mhm.
That's my
Yeah.
playbook, even though I get it wrong quite a bit, but that's still
Yeah,
that's my
exactly.
edge.
Exactly.
Not
Likewise.
lately,
So
but yeah.
yeah, in this little range here, I see we have the 20-day simple moving average right above us, and it's really not that far away at this point. It's at right around 39.82. I think that level is in play. So like for me, I have a couple test trades on the long side.
Hmm.
If we hit that level, I would probably just start booking them because yeah, I'm not really expecting a whole lot. And then down here we have yesterday's low right around 38.65. And then beyond that, we have the low from a few
38.
sessions ago,
Yeah, yeah.
right
So
around
maybe it
38.40.
flushes under 38 and then turns.
Mm-hmm. So
Uh,
we've
so
got
well,
some levels.
so are you looking for people to join your Discord room?
Exactly. Yeah.
Is that your model?
So we run a Substack, and you can check that out right here. So this is pristinecapital.substack.com. I absolutely love writing this. This is a nightly piece that goes out. This is a great research note. We also do a weekend market analysis video. For right now, anyone that signs up, we're also going to add you to the Discord as well. So yeah, definitely feel free to join, especially if you're a price action trader and you think about things, even if you're a short-term trader, if you have the long-term mindset,
Yeah.
then it's for you.
Andrew, I want to thank you again for coming in. I'm rooting for you in the contest.
Thank you so much, Dale. Yeah, I'll keep you up to date as to how everything goes for sure.
Okay. And why don't you wrap it with one piece of important advice for traders to keep in mind during these tumultuous times?
Yeah, one piece of advice is I was looking at the S&P 500 and year to date, it's only up about 1%. As crazy as that sounds for all of these moves. So if that's your bogey, if you want to at least do as good as the market, maybe do a little bit better, the bar for you right now is so low. So I really think like you don't have to be a hero. You can lower your expectations for yourself. I think a lot of people are putting pressure on themselves to be able to predict everything that's going to happen in the banking system. So I think the people that put the least amount of pressure on themselves to absolutely dominate the market are going to be the ones that make it through this to the other side. If you put too much pressure on yourself, that's where things will go awry. So I would say just
Yeah.
relax, enjoy the show. And honestly, this is a great learning opportunity for all of us. So just enjoy it. If you're too overly exposed, you really can't learn a whole lot because you're just going to be stressed out. So yeah, those are my parting words for anyone in the audience.
Okay. That'll give you longevity too, because you'll save your health. And
Exactly.
appreciated my trading warrior brother, Andrew O'Connell, everybody. And follow Andrew where on Twitter at Pristine Capital.
Yep. At Real Pristine Cap.
At Real Pristine Capital is where you'll find Andrew on Twitter.
Yep.
So good talking to you again. Thanks very much, Andrew. Good hunting and great advice about take the pressure off.
Exactly. Thank you so much for having me, Dale. I really appreciate it. And we'll talk
Okay,
soon.
buddy. All right. That's it, everyone, for F.A.C.E today. We'll wrap the week up tomorrow, and you could join the team in 15 minutes, 17 minutes on the morning edge. Glad you enjoyed it, George and Sinatra, all you guys. Don't just count your pips, count your blessings. I'll see you to wrap the week tomorrow. The team and I will be here. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.